Hello and welcome to Finance Conversation. This is the 41st episode of the Merging Life and Money Show, and I am super excited to be here. For those of you who don't know me, I am your host, Marie-Jo César. I help professional women bridge the gap between life and money by acquiring and applying the relevant financial skill and knowledge they need to take control of their finances, manage their money, and understand that they can live their best life with the money they have. Thank you for joining in today. If you are watching the replay, make sure to type #replay in the chat and leave me some comments and questions. So welcome, and welcome. I come to you live every Thursday at 5 p.m. Pacific Standard Time to share valuable information about how to achieve financial wellness and live your life with means and meaning. Today, I am going to pick up from where I left off last Thursday and continue talking about your financial readiness for 2022. So grab a pen and a notebook, as you might want to take some notes and share them with family members, friends, and colleagues, because it is about sharing values that could benefit others. So if you have any question whatsoever, make sure to type them in the chat. And if you want to talk to me directly, I will share my contact information a little later in the show. As you may know, the main objective of the Merging Life and Money Show and my strong why is to empower as many women as I can with what I know about money and finance. So last week, I started to talk about how to approach 2022 as it relates to your financial wellness. And I addressed the emotional side of money, the practical side of money, and goal setting. Today, I will continue on that same path and focus on 3 points. Managing your credit and debt, making sure your money works for you, and develop a game plan. So let me start with a few disclaimers. Everything said in the Merging Life and Money Show is for general, informational, and educational purpose only. Okay? And it is not intended to constitute legal, tax, accounting, or investment advice and should not be relied upon for tax, legal, or accounting advice. You should consult with your own tax, legal, and accounting advisors before engaging in any transactions. Also, any references to investments, past or potential performance is not and should not be construed as a recommendation or as a guarantee of any specific outcome or profit. So please do not undertake any ideas or strategies discussed in this show without prior consultation with a professional financial advisor for the purpose of assessing whether the ideas or strategies that were discussed are suitable for you based on your personal financial objectives, needs, and risk tolerance. So let us begin. The first point that I want to address today is managing credit and debt. Debt can be a roadblock on the path to financial wellness, and collectively, believe it or not, Americans carried a record $14.6 trillion in debt in the spring of 2021, according to the Federal Reserve. Note that your credit and your debt are directly related to each other. So as I mentioned last week, maintaining a healthy credit score and controlling your debt have a significant impact on your financial health and well-being. Therefore, Having a good plan for using credit cards and debt will help you feel more secure and possibly less stressed about your spending decisions. So, in 2022, make sure to tackle your debt and monitor your credit. A short-term strategy to tackle your debt is understanding first how long it will take you to pay the debt. Okay, so use a debt payment calculator to find out how long it will take you to eliminate your debt. And once you find out, aim for these best practices, and it's a few of them. So the first one is always pay on time, okay? Once you have taken out a loan, you must make your payments on time. It will help your credit score, and it will make it easier for you to get approved for a loan in the future. Pay more than the minimum payment. If you are only making minimum payments because that's all the credit card company said you needed to do, I got news for you. You are not managing your finances efficiently or effectively. So let's say, for example, that you have a credit card with a $5,000 credit balance and an interest rate of, let's say, 24.9%. And your minimum payment is $100, and you only pay the minimum on the card. It will take you over 30 years to pay off the card. It would take you, and by the way, not only would it take you 20 years to pay off the card, but you would have paid close to $44,000 in interest alone. So this looks like a huge cry for help, that something is not right. So the moral of the story is, when it comes to credit card debt, it pays to pay extra and to pay often. And it is better to ensure that you have good interest rates and terms as well, right? So in fact, with that same illustration of $5,000 in debt, credit card debt, with a rate of interest, I should say, of 4.9%, the debt would have been paid off just under, I would say, 15 years, and you would only pay about $1,500 in interest. That is quite a difference, okay? So better terms means paying off your debt faster and having a better quality of life while you are at it, because you can pay less and see a bigger impact. So it is absolutely worth it to ask your lender to give you a more favorable rate. It doesn't matter what, okay? The key to dealing with credit cards is to pay the balance in full every month. Another best practice to adopt in 2022 is to break the credit debt cycle. To manage your money properly, it is essential to stop going into debt. You will never begin building wealth as long as you continue to make debt payments. You should stop using credit cards, and you should stop borrowing money to make purchases for things other than your home. So once you set up your debt payment plan, stay focused on paying off your debt and reward yourself for major milestones that you reach. You should also work on clearing up your old debt, okay? So when you have that extra money that you would have used for debt payments, use it to start investing, and you will begin to build wealth. It is important for you to note that wealth is not measured by how much stuff you have, but by how much assets you have. So just as importantly, in the world of debt, compound interest works for the lender, not for you. So when you use credit card and you do not pay off the entire amount by the initial due date, you are setting yourself up to pay compound interest. It means that you are paying interest on previous interest, which is added to the principal sum of the debt. Another thing that you must be aware of, you must know your APR. That stands for annual percentage rate. It is the number that represents the total cost of borrowing from a lender. It incorporates the interest as well as the lender's charges plus fees and other costs. Usually, the APR you qualified for when applying for a credit card is based on your credit worthiness. So make it your business in 2022 to understand how credit and debt are related and take the necessary action to reduce and or avoid as much debt as possible, particularly credit card debt. Now, let's take a look at the second point that I want to address today, which is making sure your money works for you. The best way to make your money work for you is to I should say the best way to make money is to let your money work for you. Talk to someone with a successful financial history, and with their help, you can reap the benefits and tax advantages of making your money working for you. Even though you may have small savings, each time your money grows, you will have more to work with. So a couple of pointers here. Contribute to retirement plans, okay? It is never too late or too early to start saving for retirement. If you are just starting out, focus on saving as much as you can now. If you are nearing retirement, consider increasing contribution to your savings or consider delaying your Social Security payout. The secret is to start as early as you can. If your employer offers a traditional 401k plan and you are eligible, please join the plan. It allows you to contribute pre-tax money, which can be a significant advantage. Moreover, if your employer offers to match your 401k plan contributions, make sure to contribute at least enough to take full advantage of the match. It is essentially free money, so do not leave it on the table. Also, consider establishing an individual retirement account or an IRA to help build your nest egg. You have two options, a traditional IRA or a Roth IRA. So find out which one may be right for you. And if you are age 50 or older, take advantage of catch-up contributions. All right. Another way to make your money works for you is by considering investing. Investing is one method that puts your money to work for you. It requires knowledge of the markets and knowledge of a few rules. So make sure to learn about investment before hiring a financial advisor. So here are a few strategies to help you make informed investment decisions. Note that all investments involve some degree of risks. If you intend to purchase securities such as stocks, bonds, or mutual funds, it is important that you understand before you invest that you could lose some or all of your money. The reward of taking risk is a potential for a greater investment return. So if you have a financial goal with a long-term horizon, you are likely to make more money by carefully investing in assets categories with greater risk, like stocks or bonds, rather than restricting your investments to assets with less risk, like cash equivalents. Second point, consider an appropriate mix of investment. Okay, so by including asset categories with investment return that move up and down under different market conditions within your portfolio, you can help protect against significant losses, right? So invest in more than one asset category to reduce the risk to lose money. And if one asset category's investment return falls, you will be able to counteract your losses in that asset category with better investment return in another asset category. Another one is diversify your investment. It is common sense not to put all your eggs in one basket. By picking the right group of investment within an asset category, you may be able to limit your losses and reduce the fluctuation of investment return without sacrificing too much potential gain. Another one, consider dollar cost averaging. Through the investment strategy known as dollar cost averaging, you can protect yourself from the risk of investing all of your money at the wrong time by following a consistent pattern of adding new money to your investment over a long period of time. Also, consider rebalancing your portfolio periodically. I do apologize for the grandfather clock in the background. Okay, I was saying, consider rebalancing your portfolio periodically. Rebalancing means bringing your portfolio back to your original asset allocation mix. By rebalancing, you will ensure that your portfolio does not overemphasize one or more asset categories, and you will return your portfolio to a comfortable level of risk. So by making regular investment with the same amount of money each time, you will buy more of an investment when its price is low and less of the investment when its price is high. Let's look at the third point. My last point for today's show is developing a game plan. It is important to adopt some tenets, some principle you can follow year on year that will help you make the most of the money you have. Pay all your bills on time every month. The principle is extremely important when you want to manage your money properly. Pay everything you owe on time every single month, and you will prevent yourself from developing a money management problem. It is not just about the money. It is about respecting the people or the companies to whom you owe the money. Okay? Pay down your debt. As I mentioned earlier, debt is probably the single biggest barrier to wealth for most individuals. It robs you of your money now, and it steals from your future. All non-mortgage debt needs to be paid off as quickly as possible. Credit card debts, along with overdrafts and loans, particularly secured one, needs to be paid off as a matter of urgency. Pay off your mortgage. If your mortgage balance is small enough, pay it off. If it's not, try to restructure it so you are making a larger payment over a shorter amount of time. Another principle that I would leave with you is stash away money from raises and bonuses. It is crucial to spend intentionally. and to have a plan to make sure that you take care of your future. Okay, you can use a portion of your bonus to pay off some debts. Okay, particularly the lingering credit card debts. You could use it to stock up your emergency fund. You could use it to increase your retirement contribution or to put money toward a big life goal. Now, another one is to take steps to reduce your taxes. With some tax planning, you can owe less money to the IRS at the end of the year. Here are a few measures you can take to reduce your taxable income and the taxes you will owe. These are basically what I would say basic tax saving strategies that every taxpayer should know about. So earn tax-free income. The single best way to avoid taxes is to earn as much tax-free income as possible. Okay, and some of the most common ways are saving money for your children's education, investing in municipal bonds, contributing to a health savings account, giving some investment to your children, and I guess receiving health insurance and other benefits from your employer. Maximize your tax deductions. The most well-known way to reduce taxable income is to take tax deductions. The more deduction you have, the less tax you will pay. People in business can deduct all their business expenses, such as inventory, office or home travel, and operating costs. And most small businesses can also qualify for up to 20% pass through tax deduction established by the Tax Cuts and Jobs Act for 2018 through 2025. And every taxpayer is entitled to take a standard deduction or to itemize their deductions. Now, another strategy for less taxes is to defer your taxes. You will have to pay income tax on your taxable income sooner or later, but you will usually be better off if you make it later. Deferring tax payments to a future year is like getting a free loan from the government. There are many ways to doing this, okay, from postponing an employer bonus to investing in an IRA and other retirement accounts. Reduce your tax rate. Federal income tax rates can vary drastically from as low as 0%, capital gain tax for people in the 10% or 12% tax bracket, to as high as 37%. So you can benefit from the lowest rate available if you earn income from long-term investment like stocks, bonds, mutual fund, and real estate. Another one is take advantage of your tax filing status. Your tax filing status can have a big effect on the taxes you pay. It will determine the tax bracket you fall in. It is also crucial for calculating your standard deduction. Another possible one is to shift income to others. If you are in a high tax bracket, you can save substantial taxes by shifting your income to someone in a lower tax bracket, for example, your kids. Okay? Donate money, goods, or stock to charity. That's another good strategy as well. And another principle, now that we address the taxes, is to pay the government on time. This goes for IRS taxes, property taxes, state taxes, speeding fines, parking tickets, your car, your automobile's registrations, and anything you owe the government. So many people have gotten themselves into financial and legal trouble by either ignoring or delaying their government financial obligations. So be fiscally responsible. If you do not pay the IRS or you do not properly prepare your taxes, the IRS will come after you. If you do not pay your parking tickets today, someday you will pay a much larger fine. If you do not pay your speeding tickets on time, you will pay significantly more to get your vehicle back, your vehicle license back. So paying what you owe on time, every time, makes very good financial sense. Another piece of the financial game is review your estate plan. Everyone needs an estate plan, even if you do not own a home, a car, or a business. Okay? Estate planning is a way to declare your wishes for your remains after your death and to give clear instructions if you become incapacitated. Estate planning eases stress on your loved ones and lets you make decisions about your legacy. Your estate includes anything that has a cash value, such as your home, other property, even your digital assets, emails, your frequent flyer miles, business profit and assets, bank account, insurance policies, retirement account and pension, you name it, social security benefit, and even military benefits. So when you die, your assets are used to pay debts, taxes, legal fees, medical bills, and funeral costs. The leftover is inheritance for your dependents. Ideally, you would want your estate to have enough cash so that your family does not have to sell anything to settle your estate. Also note that if you do not have a will assigning a guardian for your dependents, such as minor children, and if you do not leave clear instruction for other possession and for what you want done with your body, your estate will be settled according to your state's laws. Last but not least, educate yourself and implement your knowledge. A lack of understanding basic financial concept can keep you from changing your mindset and rewriting your money story. Therefore, learn the language of money by educating yourself on money matters. You will be able to make educated money decisions and feel confident and in control of your future. It is important to find the type of education that works for you. Okay, so you will be fully equipped to take 2022 if you do so. Okay, so I'm going to stop here for today's show. I think I covered a lot. And I'm going to sum up what I talked about. Today, I talked about your financial readiness for 2022, and this was part 2, since I talked about it last week as well. And this week, I focused on managing credit and debt, making sure your money works for you, and developing a game plan. So I'm going to leave you with these last thoughts, okay? So appreciate what you have and practice gratitude. Be thankful for the thing you may take for granted and start or end your day with thankfulness. Remember that despite how poor or stressed you are feeling about money, 80% of the world's population lives on less than $10 a day. Okay? Your laptop, your phone, your car, the bed, and even the clean water from your tap are all things worth celebration. Also, remember that Gratitude is the key emotion for turning on the feelings of prosperity in your life. Okay? The key to conscious finances is to feel grateful for all that you already have and all that you have to look forward to. So, by properly putting things in perspective, it is easy to realize that you have much more to be grateful for than to be bitter about. Okay? So, study shows that people who take time to reflect on the positive aspect in their lives report feeling happier. So take a few minutes each day to identify at least 3 things you are grateful for and allow yourself to truly feel the gratitude and appreciation. Remember that the new year brings on an opportunity to reflect on the past and set new goals for the year ahead. So take stock of your budget, your debt, and your investment, and check them against your financial goals. So make sure to prepare for an abounding 2022. As you know, I like to end the show with a quote, and today's quote is from a chap by the name of Vern McClellan, and it reads, "Whatever the new year brings to you will depend a great deal on what you bring to the new year." So this brings us to the end of the show. So let me share my contact information. You can reach me by sending me an email at mj@mariejocaesar.com or by sending me a direct message via Messenger. I hope you enjoyed the show today and will follow the principles I talked about and take the necessary steps to make 2022 your best year yet. So for more information about how to achieve financial wellness from the inside out and live a purposeful life with the money you have, join me next week, Thursday at 5 p.m. Pacific Time, 6 p.m. Mountain Time, 8 p.m. Eastern Time, 9 p.m. Atlantic Time for my Bermuda peeps, and 10 a.m. Friday, Brisbane, Australia time for my Australian friends. Thank you for being here today on the Merging Life and Money Show. I am your host, Marie-Jo César. I will be back again next week. Until then, continue merging life and money. Bye for now.